Hello guys, welcome back to this review. This is NAS100 or USD-100. I want to show you how I used the 4-hour power of 3 and the 5-minute dealing range theory on an engulfing candle out of fair value gap or an area of interest. Let's go to the 4-hour time frame. The 4-hour time frame, notice what happened. We had bullish candle, the second candle sweeping the high of the first candle, the bullish candle, and closing below. And so this right here was a sweep. If you go to the lower time frame, this candle was the accumulation candle and this candle was the manipulation candle. We are therefore going to look for sells in the distribution candle, this and this. And so the way I said, we are adding dealing ranges to our PO3 or power of 3 so that we can catch better entries, tighter stop losses, and higher risk reward ratio. So this here is the one that gives me that dealing range. Okay, you can see from the high to the lowest point of this dealing range, and then we want to catch something that is coming out of this premium. I'll call it the 4-hour premium, and then delete this dealing range. We are looking for sells on this candle. I might have gotten my dealing range a bit wrong. Let me just redraw that. Yeah, you want to be as accurate as possible. You want to be as accurate as possible. Good. So that is done. We go to the 5-minute time frame and see what is happening. So this is the new hour candle open at this time. This is 9 a.m. UTC, or whichever time frame, whichever time you want to use, right? So this is the new 4-hour candle opening. Now we want to take note of a few things. The first thing is there is a clear manipulation and there is a market structure shift at the bottom. That means the market intends to go lower without a doubt. Without any doubt, the market intends to go lower. Now manipulation happened. It leaves us with a fair value gap right here. We can see this fair value gap, and then price reacts of this fair value gap. Now that we have that happening, let me try and write. So we have price reacting of this fair value gap. Right now, you'll notice we have an engulfing candle out of this fair value gap. So this candle will give us another dealing range in the 15-minute time frame. So we drop from the high of this candle to the low of this candle. So this gives us our lower time frame dealing range, right there. So this becomes my 5-minute premium So what are we expecting? As the new 4-hour candle is forming, we are expecting price to come back to this 5-minute premium of this dealing range and drop like a waterfall. It will drop like what can I say, a jet, dropping a fighter jet. So the new 4-hour candle opens. We are now anticipating for price to come back to this premium, right? And let us see what happened at exactly 12:30. This candle tags into this premium and price starts dropping like crazy. So at this point, you want to place your, actually as you're waiting for price to come back, you can place your sell limit right there. Sell limits on this area. You can place your sell limits there and just wait for price to come back to that area. So I know your mentor told you to place your stop loss above this high and target a 1 to 3, which is not bad. Your 1 to 3 is around this area here. Not bad. Conservative trading, good risk management, but if you're using the dealing ranges, you have a tighter stop loss. That means your stop loss is slightly above the 5-minute premium that we just did, or this high here, this high. Also, why do you want to use this high as your stop loss? Because it is a protected high. You have lower high, lower low, lower high, lower low, lower high, lower low, and this market structure shift gives us a protection above this high. So we do not at any point expect price to go above that high. And now what do we have? Risk to reward ratio of 7.89, and maybe you want to use the market structure again to get your better risk to reward. We have this gap here. You can target that gap or the midpoint of the gap, right? Or you can target these swing lows right here. You can see this swing low. You can target that one as well as your final take profit. And let's see what we have. We have a 12.23 risk to reward ratio. This trade was triggered at exactly 12:30, and at 13:35, which is around 1 hour 5 minutes later, you have your 12% increase if you are risking 1% of your account. And guys, this is how you add dealing ranges to your power of 3 and secure maximum profit, tight risks and high risk to reward. You can also notice this was an almost zero drawdown entry. If you got a tiny drawdown, it's because of spreads, but this was quite a sharp entry, or what others call sniper entries. You go test this, back test this, check it out, and tell me what you think in the comment section. That's it. Bye bye.